Hi, welcome to the Market Alert for Friday, the 24th of February 2017. So yesterday the market, this is the pre-market session. You can see the market trading at the 20,800. The market traded up to this before the main part of the session. So let's just fast forward a bit. You see the market going through this new all-time high and then trading sideways. So the market had put on quite a few points in the pre-market session, and then it put in a sell signal to begin with. Let's get everybody short, and we all know what happened here. The market came back, put in a buy signal, and then stopped us out for a 19-point loss. Then the market decided to do what I thought it was going to do here, and that is the classic shakeout. Let's get rid of all of the people who are long, because it's easy going long at the moment because the market keeps making new highs. So let's just shake out all of the weak longs, as it were. The market goes down, we then get a sell. So okay, if you're going to shake out, we'll go with the shakeout. And the market then decides to come back again, finds resistance at the 20,800, and then moves lower before the crude oil figures come out. And this was a trade we were able to recoup around 11 points on this trade. There was a maximum of 17 at one point, but that would be difficult to get because the market was jumping around a bit at this point. The crude oil figures are released, the market goes down and finds support at the 20,750 level. Then we get a buy signal, and at this point I send out a note to say that there will need to be some convincing move through any buy signal if the market is to move higher. And what that means is driving through the scalp, not just hovering around it. There was some selling pressure around, there's a shakeout in the background. We've had many days straight to the upside, which we'll look at in just a moment. And therefore, to move higher, you want to see something convincingly move through the scalp, and we do. This is a 39-point move to recoup some of the losses, plus there was a 20-point loss here, so we're already 39 points down. It's a 39-point trade there, which wouldn't have got, because I started to trail the stop, which I'm going to have to show you here because I was watching this on another screen and marking it up on another one, but the trailing stop was here at 20,791, and I forgot to replicate it on this one. So only 29 points profit on this and not the 39, as the market then traded sideways. You can see there as it comes back, but all losses recouped, and then the market continues higher. And in the evening we had friends around for dinner, so I didn't do this trade, but again the long side you can see turning out to be favourable, and that's after they've shaken everybody out in the first part of the session. This market is starting to show signs of struggling a bit. Let me just move to the daily chart, end of day here, and make a few adjustments so we can see it. So we've got a situation which I got entirely wrong yesterday, and I apologise. We had 1, 2, 3, 4, 5 block of 5 days straight up, 2 days rest, and then we've had 1, 2, 3, 4 more days where the market's made new all-time highs. So let me just draw that in there. So a block of 5 and a block of 4 with a bit of a rest, and this market is due for a rest. And also I noticed that this bar here, if you look at the volume, is greater than the previous day, so there's a bit of selling pressure around as well. And as we've done for the last few days as well, again, let's just draw in a 50% retracement there. Let's remove this one. Until the market closes below a 50% retracement of the rising lows, this market remains to the buy side as well. And like yesterday, no doubt we're going to get short shakeouts, but we are due for some profit taking in this market. You can't sustain these sorts of levels. We had a couple of days there where the market did move lower, but then found support and then moved higher again. So we've had 2 moves up. We had a 5-day shunt to the upside, 2 days rest, and then 4 days. But notice the last 4 days, the range of the bars are not as great as when we broke out of this range as well. So there is a bit of weakness coming into this market just by observation alone. News-wise today, we've got new home sales and revised consumer sentiment. These are the only two news items out for today. They're medium impact, it's not a problem. Watch the first hour. After that, likely that the market will trade sideways unless something comes out politically that will move the markets. And implied volatility, we're at 941, down from 955 yesterday, which is rather strange given the shakeout, but that's what it is. They've decided to say there's not much risk around for the downside, and there you can see that reflected in the chart as well, with a bit of a dip in the implied volatility. So that's it for today. An interesting day yesterday, but more of a challenge than it has been of late. And again, it's indicative really that the market is starting to show a bit of weakness. And I say, if you just by observation alone, you can see that the range of those bars, just to remind you there, big bars to the upside there, the first 5 days, and the last 4 as the market's broken out from this high, we can see the market struggling a bit. It doesn't mean to say it's going to go down, but I think they're trying to get this up to around 21,000 before they drop it. By the looks of things, this market's moved a huge amount since Trump was inaugurated in January, which is, let's have a look, see if we can just pick it up. Put the data in, let's just get rid of the news. Let's see if we can find the 20th. There you go, there's the 20th, so the 23rd, and just get a quick ballpark figure there. Up to yesterday, this market's moved over 1,000 points, which is a huge move. 5% on the Dow as it's trading around the 20,800, just over 5-6%. Not sustainable in the longer term there. Right, that's it. Well, certainly not without a pullback. Let's put it that way. Right, that's it. I will speak to you later. As ever, thanks for watching, and see you in the next